months, 8 months, 10 months ago. We got into a little trouble back then. If you remember, the price of gas went up. And we heard people say, oh, it's going to do $200 a barrel, $250, $300 for oil, or whatever, sky's the limit. Well, $80 a barrel is actually what it's going to end out at, 80 to 90, because that's the cost of finding a new barrel. But the investment funds, the commodity speculators, and other people started speculating in oil, and by golly, those prices started to go up. Well, that had an effect. For a lot of us, it drained off our money, to put it just very bluntly. If we had a lot of money, we saw it go right out the door, and if we didn't have much money at all, we still saw it go out right out the door. So everybody was kind of hurt, and particularly those folks who have lower incomes, it was sort of devastating to them. And there's a lot of those folks around, so the economy sort of got a little bit of a punch. And this was at a time that we were coming off of a couple of good years where, quite frankly, we'd all been spending rather freely, maybe using home equity loans, maybe buying houses at prices that were higher than ever, taking some of those trips to those great big ships and so forth. So it kind of hit us, and things started to turn down a little. Well, we sort of coasted along at that, and then we found that car sales didn't look too good, particularly for General Motors and Ford, who seemed to have the gas guzzlers. So then we got into some obscure area of the market called auction rate securities. That was the first warning flag. Some of the auction rate securities auctions didn't occur correctly. What this simply meant was some long-term bonds whose interest rates set every couple of weeks, reset every couple of weeks, didn't reset correctly. And that left a lot of people unable to get their money, and they were very unhappy, and that was a real problem. Then we coasted along rather nervously, and we got Fannie and Freddie into trouble. And they're kind of key to the markets we serve. And there was a lot of concern about them. Then we barely got off the floor, I think, and Bear Stearns went bye-bye. Then Lehman went. Now, Lehman was a central market maker to certain types of commercial paper. Nobody bothered to worry about that too much at the time. But the economy runs on commercial paper. So that was a real problem. Now, let me put this into perspective. General Electric Company is one of the world's preeminent corporations. It's over 120 years old or so. It's everywhere. It's got really good businesses. One of those businesses is financial. When you go to Home Depot, Lowe's, or a number of other stores to buy a 2x4, you are actually getting a loan from the General Electric Company. GE handles their credit in one way or another, and even if you pay that off in 20 days, GE carried you on the cuff for 20 days, and if you take some months to pay that off because it wasn't a 2x4, it was maybe a new kitchen, again, they're carrying you on the cuff. Well, no big deal. GE's a big company, and they borrow about $100 billion of commercial paper money, and they borrow it every 3 months. So every month, they've got to go to the commercial paper market and say, could we borrow $10, $20, $30 billion? You got any money today? And this works quite nicely because they can borrow it for, 4, 5, 6% or whatever they pay because they are a AAA company. And then they charge the rest of us, 10, 12, 15% or whatever it is, and they make it up in between. And it was going okay. Well, right now the commercial paper market started to freeze. So here we have a major blue chip that can't borrow money, or at least they can't borrow it very well, very easily. And what happens? Well, it starts to look like Crisis City. If you watch the GE stock price, it's gone down and down and down. What do we call companies that can't borrow, no money? We call them bankrupt. Now, to use that term relative to GE, it seems almost obscene. But nonetheless, they had what we'll call a real cash crunch. Well, they can get the money now. They're getting the money. But for a while there, it looks kind of scary Then, as if that weren't enough fun, because we are having fun here, a couple of money markets broke the buck. Where do we put our money? Money markets. Why? Well, it's a safe place to put it. Well, those people got 97 cents on the dollar, and everybody started to withdraw their money market accounts. That's $3 trillion of cash. Even by Washington standards, a lot of money. Fed had to step in and guarantee those. Then we got some bank failures. Well, that's good. And then we got some questions of interbank loans, because if banks are failing, why do I want to be lending money to other banks? And yet banks borrow, lend money every day to each other, both domestically and internationally. You may have seen something about LIBOR on the news today. Well, that's the interbank loan out of London. Then we come along to our 401ks. Not that any of us would want to open those statements this week, but as of last week, we were down $2 trillion. I don't know what we were down as of, say, 8:30 this morning on the TV, but it was a lot more than $2 trillion. Some of that hopefully will come back shortly. So those are some of the things that we were faced with in the last week. Now, I want to put this into perspective, and I'd like to turn back, as the Lone Ranger used to say, to those thrilling days of yesteryear. And back in the 1870s, 1880s, we got around the country by stagecoach. And on the stagecoach, there were two people. There was the driver and the guy with the strongbox, the shotgun. Now, of course, people went around the country on stages to get around, but the major function of the stagecoach was to get that, the Wells Fargo stagecoach, was to get that strongbox between cities. Because you see, we had a banking system, and the banks would have gold in them. And everybody paid their bills or accounts with gold. But gold is not a particularly useful thing to pay with, even if it's a $5 gold piece, which is worth about $80, $100 in real terms back then. You want paper money, smaller bills, smaller whatever, and banks would issue currency. So we take a bank run by a bank president. Let's call that guy Honest Jed. He's an honest guy, looks honest. Been in town for a couple weeks, looks good. So he opens Honest Jed's bank, and he's got gold, say $10,000 worth of gold. And so he issues $10,000 worth of paper. Big deal. It's redeemable with gold, no big deal. Well, he discovers quickly that he can issue more than $10,000 worth of paper, because nobody's going to come in and ask for their gold. It's on deposit at the bank. There's no problem. We'll use paper. So he issues maybe $200,000 worth of paper, and he makes this as loans to people. So this is real profitable for Honest Jed, and it also helps commerce. You know, we've got money in circulation. People can buy and sell. People can go down to the general store, or the mercantile as they call it. We're okay. So things go on fine. And then some day, some guy finds out that Honest Jed's only got $10,000 in the bank in gold, and puts two and two together, and what do we call that? Bank run. Honest Jed doesn't have the money. Well, he never did have the money. But we've all been okay now, but now there's a run on Honest Jed's bank. So he wires Denver, or wherever the local correspondent bank is, grabs some mortgages, puts them in a packet, ships the mortgages off to Denver, and the Wells Fargo stage brings the gold back into the local bank. And they bring him whatever gold he needs, because he's got something underlying that paper currency, mostly mortgages. He turns the mortgages temporarily into gold. Everybody queues up at the bank. It's a bank run. They want their money. He passes out the gold. Everybody takes the gold home. And what do they say? What do I do with this stuff? So the next day they bring it back, or within a week they bring it back, as it always happened. He puts the gold back on the Wells Fargo stage. The stage takes it back up to Denver. They bring the mortgages back. They've been called discount